If you receive any Centrelink payment, age pension, JobSeeker, carer payment, family tax benefit, anything at all, and you are planning to lodge your tax return this week, I need you to stop and watch this first, because right now, thousands of Australians are making a mistake that is costing them time, money, and in some cases, triggering a Centrelink debt they never saw coming. The tax return portal is open. myTax is ready. And I completely understand the urge to jump in and get it done, especially if you're expecting a refund. But here's what Services Australia and the ATO are both warning right now, and what most people are ignoring. Stay with me for the next few minutes, because this could literally save you thousands of dollars and weeks of stress. Welcome back. This channel covers Centrelink, age pension, and government payments in plain English. And today, we're covering something that is happening right now, this week, that affects millions of Australians across every single payment type. It doesn't matter if you receive the age pension, JobSeeker, carer payment, disability support pension, family tax benefit, youth allowance, or any other Centrelink payment. What I'm about to share applies to you. Tax time has officially opened. The new financial year started on the 1st of July, and across Australia, people are logging into MyGov and lodging their tax returns as fast as they can, some within hours of the financial year turning over. And that eagerness, that rush, is exactly what's causing the problem. Let me give you a number that should make you pause. For the 2023 to 24 financial year, more than 142,000 people amended their tax return after lodging in the first 2 weeks of July. 142,000 people who had to go back, fix mistakes, resubmit, and in many cases deal with delays to their refund. Or worse, discover they owed money they weren't expecting. And the reason this happened isn't that these people were careless or bad at maths. It happened because they lodged too early, before all of their information was ready. This year, Services Australia and the ATO are both issuing the same warning. And I want to make sure every single one of you watching this understands exactly what that warning means. Here is what most people don't understand about the tax return process when you receive Centrelink payments. Your payment summary information should pre-fill in your Australian Taxation Office tax return by late July. Late July, not early July, not July 2nd. Late July. Most of the information you need, including income and Centrelink payment details, is not pre-filled in the ATO's myTax until late July. So, what happens if you log in on July the 2nd, see that some of your details are there, assume everything is fine, and lodge? You lodge an incomplete return. Numbers are missing, income figures are wrong, and you either get a smaller refund than you're entitled to, or you trigger a debt because Centrelink later reconciles your actual income against your estimates. Lodging too early can mean relying on incomplete information, which can lead to mistakes, delays, and the need to amend your return later. Now, I want to talk about something that a lot of people don't connect to their tax return. If you receive family tax benefit, child care subsidy, or certain other family payments, those payments are based on an estimate of your income for the year. At the end of the financial year, Centrelink reconciles that estimate against your actual income. If your actual income was higher than your estimate, even by a small amount, Centrelink can issue a debt. You may have to pay money back. Keeping your family income estimate up to date throughout the financial year is one of the most effective ways to reduce the risk of a debt. Even small changes to your circumstances can affect your payments. Taking 5 minutes to check your details now could save you thousands. And here's where the tax return connection comes in. When you lodge your tax return, your income details are automatically passed to Centrelink. That's how they balance your family payments. So if you lodge early with incomplete information, wrong income figures, missing payment data, that incorrect data goes to Centrelink too, and the reconciliation can go wrong. The bottom line, lodge early. Get your Centrelink income data wrong, and you could trigger a debt you didn't expect for income you already spent. Services Australia's official advice is, don't rush to get your tax done. Save yourself time, reduce the risk of mistakes, and lodge when your details pre-fill in late July. They go further. It's best to wait until your information has pre-filled before you lodge your tax return. This helps avoid mistakes and the need to amend it later. If you lodge your return before your payment information has pre-filled, you may need to update and resubmit it. So, the official advice straight from Services Australia is to wait. Wait until late July. Let the system pre-fill your details. Then lodge. Now, here's something really important and something that catches a lot of people out. Not all Centrelink payments pre-fill in myTax automatically. Most do, but some don't. Some emergency and disaster payments are taxable but don't pre-fill in myTax or show on your Centrelink payment summary. You'll need to add these payments to your tax return yourself. Australian Taxation Office. Some payments don't show on the payment summary and won't pre-fill in ATO myTax. You might need to add them to your tax return yourself. This includes disaster payments. This is particularly relevant for anyone who received a disaster recovery allowance in the past financial year. For example, if you were affected by the North Queensland flooding, the Northern Territory flooding, or the Queensland flooding events between December 2025 and March 2026, those payments are taxable, but they won't automatically appear in your myTax. You need to add them yourself. If you received one of these payments and you don't include it, that's an error on your tax return, and errors can attract ATO attention. Also important, family tax benefit and child care subsidy are non-taxable payments. If you only received payments of family tax benefit and child care subsidy from Services Australia, you won't get a payment summary. This surprises many families who expect a payment summary to arrive. If you're a pensioner or self-funded retiree, there is a tax offset you may be entitled to that many people don't know about, and it can significantly reduce how much tax you pay or eliminate it altogether. The seniors and pensioners tax offset may reduce your tax liability. To qualify for this tax offset, you must meet both conditions: eligibility for Australian government pensions and similar payments. Yahoo! This is called SAPTO, the Seniors and Pensioners Tax Offset. And the good news is that myTax may actually remind you about it automatically. A reminder message will be displayed when your client may be eligible for the Seniors and Pensioners Tax Offset because they were either in receipt of a qualifying Australian government pension or allowance, or satisfy the age requirement for the Centrelink age pension as at June 30th of the current financial year. But the keyword is may. Don't assume it's been applied. Check. Because if you're eligible and you miss it, you could be paying more tax than you need to, or getting a smaller refund than you should. There is one more thing I want to cover because tax time is unfortunately also the peak season for scammers, and Centrelink recipients are a prime target. Beware of emails, phone calls, texts, and social media messages claiming to be from Services Australia, the ATO, MyGov, or another government department. Scammers often make fake websites that mimic MyGov to steal personal and financial information. If they get a hold of this information, they might be able to use your identity to steal your payments, commit fraud, and other crimes. The rule is simple: stop, check, protect. The ATO and Services Australia will never ask you to click a link in an email or text to log in. They will never call you and demand immediate payment. And they will never ask for your password. If you receive any message that seems urgent or asks you to click a link, don't. Go directly to MyGov by typing the address yourself and check there. You may have seen news this week about a new $1,000 instant tax deduction. Let me be very clear about what this is and when it applies. The $1,000 instant tax deduction will come into effect in the new financial year. This allows Australians to reduce their taxable income by $1,000 without providing receipts when they lodge next year's 2026 to 27 tax return. Importantly, this is starting next financial year, so you cannot claim it in this year's tax return. So if you're filing your tax return right now, for the 2025 to 26 financial year, the $1,000 no receipt deduction does not apply. That applies to next year's return, which you'll lodge in 2027. The current no receipt limit for work-related deductions is still $300 for this year's return. Don't let anyone tell you otherwise, and don't assume you can claim $1,000 yet. One more important change to know about: employers will be required to pay their employees superannuation at the same time as wages, meaning the compulsory 12% payment will need to be made weekly, fortnightly, or monthly instead of quarterly. The change is designed to crack down on unpaid super. SBS. If you're still working while receiving a part pension, or if you have adult children who work, this is worth knowing. Super is now due on the same day as wages. If an employer isn't doing this, employees now have much better visibility to spot it early. Let me paint two pictures. First, Helen, 71, is on the age pension. She lodges her tax return on July 3rd, excited to get it done. Her Centrelink payment details haven't pre-filled yet, so she estimates her pension income from memory. She gets the number slightly wrong. A few weeks later, she receives a letter from the ATO asking her to amend her return. Her refund is delayed by 6 weeks. Now, Margaret, also 71, also on the age pension. She watches a video like this one. She waits until late July, when everything pre-fills in myTax automatically. She lodges in 5 minutes, gets every number right first time, and receives her refund within 2 weeks. Same situation, very different outcomes. The only difference? Margaret waited 3 weeks. Step 1. Do not lodge your tax return before late July if you receive any Centrelink payment. Wait for your information to pre-fill. Step 2. From early July, log into MyGov and check your Centrelink payment summary. Make sure all your payments for the year are listed correctly. Step 3. Check whether you received any disaster relief payments in the last financial year. If yes, note the amounts because these may not pre-fill and you'll need to add them manually. Step 4. If you're a pensioner or over pension age, check whether you're eligible for the Seniors and Pensioners Tax Offset, SAPTO, when you lodge. myTax may prompt you, but double check. Step 5. If you receive family tax benefit or child care subsidy, update your income estimate in MyGov now before you lodge. This reduces the risk of a debt at reconciliation time. Step 6. Be on high alert for scams. If anything looks suspicious, go directly to MyGov yourself. Never click links in unexpected messages. Step 7. If you're unsure, call the ATO on 132861 or Services Australia on 132300. Tax returns will flow through the system from late July onwards. If you're owed a refund, lodging in late July rather than early July is actually faster in the long run because you won't need to amend. The new $1,000 no receipt deduction will be available from next year's return, 2026 to 27. We'll cover that in full closer to the time. The message today is simple. Tax time is open, but that doesn't mean you should rush. If you receive Centrelink payments, your information won't fully pre-fill in myTax until late July. Lodging early risks errors, delays, and potential Centrelink debts. Wait until late July. Check your payment summary in MyGov. Make sure disaster payments are included if they apply. Check your SAPTO eligibility. Watch out for scams. And don't assume the new $1,000 deduction applies to this year's return. It doesn't. If this video just saved you from making a costly mistake, give it a thumbs up. That's all I ask. Share this with someone you know who receives Centrelink and might be rushing to lodge right now. It could save them a lot of stress. Drop a comment below. Are you waiting until late July or did you already lodge? I'd love to know. And subscribe, because every time there's something important for Centrelink recipients, we'll be here to explain it clearly. See you in the next one.